Good afternoon, everyone, and welcome to the Daily Volatility Box report for November 19th, 2019. We are TOSindicators.com, home of the Volatility Box. Before releasing this video, we actually released our newest tutorial video for the How to Think Script series, in which we take the MTF, so the multi-time frame DMI indicator, and then we take all of the user feedback that we've received from it from our own community itself, which I think illustrates just how awesome this entire concept of being able to take feedback and then refine it. So we take that and we make that old indicator better. So that's step one in that tutorial. And then we take that better indicator and we turn that into some scans that help you find some really nice candidates that might be ripe for some really nice explosive moves where you get at least a double, if not a triple in your options. And we've seen that happen with our own members who like the breakout sort of trading. You've already used the MTF and you sent us several trades in which it's worked out really, really well for you. I think that this improved version with some feedback should only improve that process from here on out, and hopefully treating the scans in the block sort of format that we discussed in the video helps you to start to find some more entries instead of having to just go through your own watch list. So now with our actual futures volatility box, for today, we didn't really have any entries that set up, and so we'll take a look at some of these markets just to talk about some patterns. Specifically, we'll take a look at copper futures because I think there's something interesting that happened there. And then we'll also cover the crude trade for tomorrow, right? And so on our calendar, if we take a look, we have our inventories reports coming up. And so this trade has typically been a really nice trade for us. However, last week this trade did not work out for us. And so I think that's important to call out if you believe in recency bias or something of that sort. And so I think that may be sort of just the one reason why some of you traders may want to be a little bit more cautious, especially if you don't normally trade crude. But again, I'm not sure that one missed trade after a string of some consecutive winners is enough to change plans or to really give caution. It just may be so if, say, last week was the first time you traded the inventories report, you may have that recency bias, but our typical rules for the crude inventories report is to start looking at 4 a.m. Pacific onwards, and we check to see whether or not we've breached either side's aggressive volatility box ranges. If we have and we didn't bounce from there, then that's your sign to play the inventories report on a more conservative scale. And if we did bounce, then you can make the decision of if you'd like to be a bit more aggressive. And if we didn't even come remotely close to breaching either side, then typically that's our signal or permission to continue to use the aggressive volatility box, and then use something like those dynamic RSI colored candles to help you time the reversal move and get in when the colors are starting to shift. After that, we also see that we have FOMC meeting minutes. And here, I think the bonds have also been a pretty good precursor of sort of the action to come. I think that first hour test will be useful. For those of you looking to trade a bit more aggressive, I think those RSI candles plus the aggressive volatility box is a pretty decent combination to try and pick up some of those moves. And if you're trying to play sort of that middle ground between you'd like to play it on an aggressive scale, but only once you have a bit more of a confirmation, but the 1 minute is a little too noisy, then I think that 3 minute chart is really that nice in between that 1 and that 5 minute chart, which a color switch on the 3 minute might give you a bit more confirmation where you can still get an entry close to the edge and hopefully maybe even into the clouds, because the closer to the conservative volatility box entry that we can get, the better, and sort of the better risk reward that you have on the trade to start off. Now, before we move to the actual charts, this is one of those stocks that's part of the Growth Market 250 list, but off of that we can see this really nice move that's set up, right, using the volatility box where we slammed into our conservative volatility box early on in the morning. So by 7 a.m., really you have entries close to our actual clouds, and then we have this color switch, which leads to a nice move down lower, right? And so I think for those of you that are wondering how do we find some of these scan candidates, that is something that we're working on, where instead of needing some TOS scans, you can start to see things that are actually triggering and decide on trades that you can take on. And so that's part of the feature set that we're building. It's soon to come, but we're continuously adding new features. As of right now, we have those 3 scans, which should give you enough sort of candidates that you want to be looking at as well, plus your own watch list, which together I think gives you just a broad array of candidates that you can start to look at while some of those features come into play. And also, before we move on, one scan that a member in particular, Ramsey, actually pointed out is that built-in scan percent change gainers and losers. And so these two can help you find some candidates. Now, again, here you have a ton of candidates. And for Volatility Box members, you know some of the things that we're looking at. Also, a lot of these just don't really have very good liquidity. And so these are things that you start to look at, but that starts to give you areas of focus where you can then run the Volatility Box for only the tickers that say you might have really heard of. And so Edit, for example, was in that percent change gain mover early on in the morning. Especially with this nice move up. And so it's areas like this where, especially once you start to do things like set the alert when the scan results change, you can be on top of the game early on in the morning and just start to treat this like an automated process where you start to do the same thing over and over and just become really, really good at it, like a machine that's just cranking out the trades and subsequently the profits. Now, if we move on to that copper trade that I mentioned was sort of interesting, if we bring it on over. The thing that I thought was semi-interesting is we had this chart bubble from our volatility box give us our heads up notification on the aggressive volatility box, and I believe probably the conservative as well, or actually probably just the aggressive, in which we were likely trending up. Let's take a look at the conservative. It should be just the aggressive. Yep, so we breached outside of the conservative, but we then did close inside. And so the aggressive volatility box was the one that gave you this heads up signal that we were likely trending up. And what I thought was interesting is shortly thereafter, we had a move fall and trigger what would be an edge of hour entry right into the edge of hour. But now if you're, say, a bit more of an aggressive trader, on a 5-minute chart, which is really, I think, a bit more conservative for day trading to begin with, we're starting to see that at our context level, granted into the next hour, but we did slam into it in what would have been technically a valid entry if we had still continued to have our orders parked till the end of the hour. And so we see that we then started to gradually stabilize and go from red to orange to red to yellow. And at the point where we go yellow, that is still where your actual entry would have been using the volatility box and where that edge of hour entry came. But if you're looking to, say, buy headed down into the price action, this is a much scarier buy than, say, waiting for price action to confirm and then looking for price to confirm using that oversold overbought indicator with the RSI candles, and then look at getting in at what is the exact same price level with the exact same risk. But this time around, you have a little bit more confidence since you're trading in the direction of the momentum as opposed to trying to catch some of these falling knives. And I think that is what made this trade particularly interesting. It is a bit more aggressive, especially considering that it's not only the edge of hour entry, but your actual entry then is coming in the next hour when you're using the previous hour's levels, right? And so at this point, the way to think about the trade is if you consider this to have been what would have normally been a valid trade entry, and you're looking to then participate in the same trade just at a later time when you haven't hit either your stop nor your target. And so really, for all intents and purposes, this trade is valid. And I think that is the interesting pattern of the day to look at in copper. So once again, tomorrow on the calendar, we have a few different things that call for your attention. The crude inventories report if you trade crude, and then the FOMC meeting minutes. Those of you that just like to be a little bit more laissez-faire, you're more patient, and you don't mind waiting for the entries if they come, and you just don't like the process of switching back and forth. I completely understand, and that's where I think the conservative volatility box is really your best bet to just stick on with. But I think we've also noticed that we've seen just less volatility than usual in the markets, and that's where I think using the aggressive volatility box with those RSI candles and maybe a 3-minute chart is a nice middle ground, at least instead of just resorting purely to the conservative volatility box, especially if that first hour test doesn't give us any indication to have to switch. All right, I hope that helps, and we'll see you in tomorrow's nightly update, and I hope you enjoy the tutorial video with the scans and the updated multi-time frame DMI indicator, which I think should be really useful in finding some of those moves where we go from quiet to explosive right away. All right, take care, everyone, and we'll see you tomorrow.